Can you talk us through how you were able to get ahead of schedule, and maybe talk us through also this new kind of like level that you've unlocked now that you're at 10, and the benefit of that. So you're thinking on growing it so quickly, I guess it'd be my number one choice, and entertain me after that.
Yeah, I mean, it was simple. It was interest rates. I mean, with interest rates that have been so low, I figure, sell some more stock from the IT company that I work for and put that into properties because, for investment properties or secondary homes, the rates were like the 3.25, 3.5, which were unheard of years ago. That was really the accelerator that really made me jump in even faster. And then also, it was hard for Greg and his team, but getting like newer properties, I kept calling Mike Stewart saying, "What's coming out as far as a ranch style, 3-4 bedroom, 2-car garage? What's in the pipe?" Because you guys are always limited on stock, and that's a good thing.
Mm-hmm.
But really, it was just the interest rates that got us there to accelerate that to get to the point where we're at. The point that you make, though, Pablo, was eye-opening, obviously, through his process as we were prepping for the show. But I didn't know after, I figured it was 10% was the normal management fee for the process. And when I got to that fifth one, I got a call from, I think back then was maybe Victoria, but if not Ashley. But she said, you qualify now for a 9% management fee once you hit that 5 property. And then running through those numbers through this exercise, it was, you figure 1 point doesn't mean much. But when you're looking at those returns and, from a range of 8 to 12 a year, that 1 point really adds up. And then when we got to 10th, and again, I didn't know this, we got to the 10th property, another call, hey, it goes down to 8%. And then the exercise I went through this weekend, listing the properties as far as the first 5, what I would get off annually, it was about an $800 cost savings. Again, doesn't sound like a lot, but that would pay a mortgage on one of my smaller units that JWB has. So again, a free month of rent. Now you compound that to the properties that we have now with my wife and I with 2% point or 2 points off, and it calculated over $3,300. And again, 2 points does not sound like a lot, but that's almost 3 months of rent for any one of the smaller properties or 2 of the larger properties that I have. So those points that you always talk about in these weekly shows mean so much, but people don't understand that or digest that as far as how applicable it is to them until I went through this exercise this past weekend.
That was a lot of fun. And so, and many people aren't even aware of what the JWB Elite program is, which is what Jeff's talking about here. And quite honestly, I don't think I do a good enough job of talking about it. We haven't really talked a lot about it on the Property of the Week shows or whatnot, but I think it's a great example of how when you work with specifically a property management company, your goals need to be aligned. It's just an example of how JWB's goals are aligned with Jeff. It's when any client is offered to do this, when any client gets to that 5th property, we automatically drop their rates from 10% monthly management fees to 9% monthly management fees. Jeff, it sounds like in your case, you didn't even know that was a part of the deal until after you had closed on the 5th property, right?
Correct. That is correct. Like you said, you guys don't promote that much, which understandably why, but also is that could be a selling point for you and your team as well.
There's a lot of things that we do that in our sales process that we want to keep these wins for people that you might not have necessarily you didn't expect. So we have a lot of those, throughout the process because it all comes from this idea of these moments of truth when you're doing business with a new business. And you as a new client, you have these first moments, the first time you call that company, how did they treat you? Did they pick up the phone, right? The first time you buy something from them, was it better than you were expecting, and all these things. So we try to have these moments of truth. I'll share with you, Jeff, that's not one of the moments of truth though. we probably should be telling people more. I probably should be telling people more that this is a part of the plan. Right, this is a part of the plan with you. So when you get to 5, you drop from 10% to 9%, like Jeff was talking about. And in his portfolio, because we actually he put the numbers together, we reviewed this prior to the call. I believe that's saved, and I've got the email here.
$3,311.
Yeah.
Yeah.
So now that
it's
he got to
significant.
to 10 properties, you drop it again from 9% down to 8%. When he's saying 2 points there off, that's 2% per month per property for 10 properties. So annually, that saves him, just as Jeff mentioned, $3,311.28. And we love that. That's why our goals are aligned. JWB makes more money when Jeff makes more money. Obviously, we want him incentivized to continue to grow his portfolio, and we want to reduce our management fees as much as we can to allow him to do that, to increase those returns on investment.
Yeah, I mean, like I said, when I ran through that, it was eye-opening. I even had to, again, share that information with my wife. She's not into the numbers. She lets me run with the numbers, but it was impressive, and she was even really shocked. So again, it doesn't seem like a lot with that 1 point here and 1 point there, but like you always say on these shows about going through a cycle, as far as looking at your returns through a cycle, that 15 to 17 years, you got to add this in as well, because it is very impressive as far as, not only the returns, but if you want to put that towards extra principal to accelerate the payment down so that you're getting more cash flow, you can do that as well. So there's a lot of ways to work with that.
Sounds like you're providing the moments of delight and still kind of selling it to your wife, this whole rental property experience. And I want to dive into that, but I got a couple questions here from the audience that I would love to pop in. And first one is from me. You said that it was interest rates that made you do it. How'd you find out that it was what was happening with interest rates, and how'd you come to the decision that this interest rate moment was such a crucial moment for you to change your plan, take money out of the stock market and put it in real estate?
Well, that's a great question when it comes to that. I mean, I was working with, again, Greg's team. I mean, Ashley, with the lenders that they have, one I use for all of my properties. They even reinvested or refinanced my primary residence here in the DC area, and went with that same bank because the low fees that they charge up front, as far as the ease of management with their website. You guys obviously upgraded to your Salesforce, and as far as some of the tools and reports, those metrics and visuals, I mean, in the IT industry where I work, those are so critical from like an executive dashboard. And if it takes me 5 minutes just to run a report per month and I get my checks on the 28th, but the proactive conversations about interest rates are low, Jeff, we have these properties that are coming up to be released to the market. That was really the main decision, as far as, again, I put the numbers on a piece of paper for my wife and walked them through. If it's 3.5, if we pay a point, it's 3.25. So part of that really is just more for educational for me, but also my wife, just to make sure we're making sound investments with the great team that Greg has with all of his staff.
And Jeff, I wanted to give you some real information of your interest rates. I'm looking at your client ROI report here, and it's amazing to see the decisions that you made that are so sound as far as investing early in a market where interest rates are going down, and we do expect home prices to be going up. So your first property purchases in 2018, you had either a 5.25% interest rate or a 5.5% interest rate. And people forget now, because we are here and, it's the pandemic and it's occupying our time and we only see what's here and now. But like a 5.25% and a 5.5% interest rate were incredible. Jeff, when you bought your first 3 properties, did you think 5.5% was too high of an interest rate to pay?
No, I thought it was great at the time.
Yeah, that's, when I first was buying my properties back 15 years ago, my interest rates were 7.5%. And I thought those were good because I was talking to my parents who had interest rates at 15 and 18%, when they bought a house, 20 years before that. But let me just kind of go through the line here because it's so fun to see. So it was 5.5%. Then your next property was 4.25%. Your next property was 4%. Your next property was 4%. The next one was 3.63%. The next one was 3.13%. Another 3.13%. And the last one that you closed on was 3% flat.
Right.
That is strategy coming together with a team, obviously, that's supporting you. But there's an incredible amount of, I'm just impressed with your ability to see the opportunity to do something about it. Because,
exactly.
People think about this opportunity to buy rental properties as, well, I'm just going to buy as many as I can or whatnot. It sounds to me like you've had a very clear picture. You mentioned getting to 15. And when we take that same pile of money that you have sort of reserved to being in this asset class, and we can engineer it in a way where you can get lower interest rates and benefit more from home price appreciation, that can have an impact in the millions of dollars on your portfolio, depending on how long you hold on to it.
Exactly. And I think, since those first initial ones obviously refinance those with Stifel, but it's really sitting down with your team and going through on the front end, what's the strategy? Yeah, everybody wants to buy properties and everybody thinks a couple $100 over their mortgage, that's profitable. But then obviously starting up your LLC and then the tax advantages to that, working with your accountant, there's a lot of benefits to that. But if there's no sound strategy laid out as far as where do you want to be in 5 years, 10 years, 15 years, and now with some of the charts that you guys provide in your new tools, I mean, it's spot on as far as seeing some of those metrics, but also seeing a trend or some of the analytics as far as when to make these purchases to benefit. Yes, the rates are starting to go up, but like you said, rents are starting to go up as well because Jacksonville is a much more desired area to move with all the marketing information you're sending out to clients. But it's only going to continue to grow as far as the population, but then also the rents hopefully will continue to grow with all of these companies moving into the area as well.